Hey guys, it is January 25th, 2026, here with your 2025 recap and your December recap. Hopefully, 2025 was a very, very nice year for you guys. Obviously, the market threw everything at us. We had Trump back in office, you had the tariff tantrum, you had the 90-day taco, which was basically just, give 90-day extension, 90-day extension, 90-day extension. That created a massive opportunity in the market to buy some of the best names out there, which went on huge runs. Softwares, your Robinhoods, your CLS, your Palantirs, semiconductors, rare earths, quantums, nuclear stocks. I mean, it was just jam-packed year with tons of opportunity. Hopefully, you guys were able to take advantage of some of that. Big lessons learned all year long. But before I kind of dive in through the totality of 2025, let's just kind of get through December. And December still technically is a red month for me. It's not going to close that way. And the way I kind of track my trades is the month that I open the trade in is the month and the P&L that month goes towards, despite maybe peeling some off weeks and months later. Just like my Netflix trade, I still have some open back from November. Even though I've been kind of covering some into this most recent weakness, all of that P&L is counting for November. So my P&L is actually growing on the November side. On the December side, I still have XOM and NEM open, and both of those I've been selling some off into strength recently. As NEM gets extended from the 50 and as XOM finally, I've been holding it for a month, had a really nice push over the last month as a nice potential breakout, and hopefully that one I'll be holding for the remainder of the year. But as I kind of sell some of that position, it is cleaning up what was a choppy December. As I mentioned here, what some of my biggest issues in December was just over trading, sitting short software, but seeing semiconductors rip. And just not taking advantage of the software fade and then just trying to get repositioned. But ultimately, it was just such a choppy environment because, some days you've got healthcare names moving and biotechs and solars are trying to chop around and get going. And, some speculative names were still kind of finishing out their unwind and building out the bottom of their base, which they've recently started to turn up. And it was just a very choppy environment, round trips everywhere. Even 2026 has kind of gotten off to that start, but we won't really talk about that too much until the end of January. But ultimately, it was a bit of a tricky environment. Fortunately, I was able to get myself into a couple of good ones that I'm still holding, and those are cleaning up the month. So kicking off December, I did get myself into NEE, and we can pull up the chart here. So on NEE, I thought this made a really nice move up. Utilities were acting well, and NEE I bought on December 1st as a hold of the 20 simple moving average, and I thought I would add on the breakout. And part of why my thinking was like that was because buying breakouts was a little bit tough at the time. So I told myself pullbacks into ascending moving averages is where I want to try to get long. And then by the same day, as we can see, or a few days later, as we can see here, I had to get stopped out on this little pull back below the 20 simple moving average. And I'm not going to sit there if it's not holding the key moving average and just widen out my stop. That's normally not how I like to play it. I want to add on strength, not add on weakness. And that, of course, would have been the bright idea because, holding through any of this for a month just sounds absolutely miserable. And not something that I ever want to find myself doing. For solar, I've also bought on December 1st as a higher low setup off of the 20 simple moving average using that support guide from a few days, and I'll kind of pull it up on the chart as my guide. And ultimately, this thing ended up breaking lower a few days later, and I also had to get out of FSLR. So another little loss here. And I bought this on December 1st, and I was using the support gap from November 25th as my guide, which was effectively the close of 260.36, and just a few days later getting stopped out. Tesla was the name that I bought on December 2nd, and I tried to buy this as the reclaim of the 50 simple moving average, and then once it rejected and took out prior days or same day's low, I ended up closing out my Tesla position. So you can kind of see here, I was getting long, just a little break over prior day high, and then stop at low of day. Not one to ever argue with price. Intel, I tried shorting into this left side peak. I was just a little bit early. It closed well. It had another little up day, and then ultimately it did end up having a pretty nice fade just as a trade, right? It's kind of one of those markets where you want to buy undercut and rallies, you want to sell into supply. That's what I was doing. I was just a little bit early, right? Selling as I think it was breaking down, expecting that left side peak here to show up as resistance, and it ended up doing what I thought it was going to do, just not on my time, and that's just trading. So not too disappointed with that one. Overall, and we can kind of look at the Intel chart just for a guide. So my thinking was, okay, look, you've just made this pretty big move, about 30% off the lows. Coming into this left side peak, short some, play a little bit of a mean reversion, not a big deal. And then ultimately, it did end up giving it, if I'd have taken my entry on the 4th, and a pretty decent little unwind, at least into the 50-day, to capture a nice little trade. But ultimately, it was not to be. And Intel, pretty nice move after the fact. But again, hindsight is hindsight, and not definitely a way to operate in the market. So Tesla, I ended up rebuying Tesla as a break back through the 50 simple moving average, right over the prior day high, and we can kind of look at, so this ended up taking out the 50-day, and I ended up getting long, and then I ended up adding as a pullback into the 50-day, which was really nice. I closed some out on this, this basically bearish engulfing bar. I tried to add some again as a higher low. I cut those at flat. And then ultimately closed the position on December 29th. Fairly decent trade, nothing too incredible. Gave back about half of the profits, but that just is what it is. QUBT, I tried this as a short twice, and we can kind of go over it. So the first time I tried shorting it against the 200 simple moving average, and then on the very subtle gap down the next day, I ended up shorting it again, and then just a little cover into that strength. I didn't cover any into the $10, basically into the $10 range, and then I tried adding again against the 50, and we can kind of take a peek at the chart here to see how I played it. So I tried shorting this thing against the 200, and then on the very subtle gap down the next day, I ended up covering some, and this was just like far too slow of a mover. So when you had this move up just a few days later, I ended up covering off a little piece. I covered nothing into this weakness, tried shorting and adding against the 50-day, and then ultimately using that 1255 level as kind of my exit, which was the high of December 22nd. And ended up, getting stopped out into this, which was pretty unfortunate for, basically what I gave back on the first trade, I made back on the second, a wash. So not that big of a deal. NEM, I played this one twice as well. I tried buying this, again, as I thought was a little bit of a bull flag breakout just a few days earlier on the 5th, and ultimately didn't get going. And then I ended up rebuying it on the 9th. And then this one did end up working halfway decent. And it's still a trade that I'm in today. As you can see, I've been kind of slowly peeling myself off in like 10% pieces of what I have left, not of my original position, 10% and 20% pieces of what I have left into the strength as we are getting extended from the 50 simple moving average. And just to kind of look at the chart, I tried buying this one in here, and that did not work. I thought that, maybe this was a clean little bull flag. Did not work, and then a few days later got nice and tight, and then I was able to buy it right over prior day high on the 9th, and then that one did end up working. Took some trims off into this strength, and then just kind of actually sat there through this entire consolidation. And part of the reason that I just sat there is I was actually trying to short SILJ, and my thinking was, okay, if SILJ is going to keep going, I'll at least have my NEM on, and I don't want to just get rid of my position so long as we continue to hold the 20 simple moving average, which is exactly what we did throughout this entire move, and I literally did nothing with my NEM throughout that consolidation. I just let it work, and then as we've begun to get a little bit more extended, took some trims in here, or excuse me, took some trims up here and then have slowly been piecing myself out, and more out on Friday. And that's just kind of how I have been playing NEM. GFI, I also tried this one right around the same time that I tried NEM, and just with no luck, right? I thought to myself, are we really going to be breaking out here? And so I tried this little, what I thought was going to be maybe a low cheat setup. I noticed it building higher lows. We were above the 50. Okay, all good. A clean bounce off the 50 and the 20, a little gap and go setup. No luck whatsoever. Buying GFI on the 5th, and just end up getting stopped out. And there's just not really tons of liquidity there for me, unfortunately. So it wasn't like some super big loss or anything. I think one of the things that I did really really well last year was keeping all of my losses to, as crazy as this might sound, 0.1, 0.2, 0.3% of the portfolio if I'm going to be wrong. 2025 was actually the year where I had no six-figure losses, which I got to give myself a pat on the back, because now 2026 I have officially had a six-figure loss, which I kind of try to avoid bigger losses when I can avoid them, but ultimately that is just the nature of the beast sometimes. So keeping position sizing in check, letting your winners work, that is a very very big theme of mine when you've got your winners. But obviously, as we have been in a choppier environment, again, we'll talk about that at the end, but being a little bit quicker and recognizing that environment, selling some off into strength maybe a little bit faster, and financing your risk from there. So GFI was one that did not work. Excuse me, I meant to write FSLR. Don't know why that ended up as an FSLA, but I also tried this one as a higher low setup on December 5th, and this one also did not end up working a few days later. So I thought we were reclaiming the 50 simple or the 20 simple moving average right in here, and I thought, okay, great, we're going to be holding above the thirds high. We're going to be reclaiming the 20 simple moving average, a 20 SMA reclaim, and ultimately did not pan out. Again, I thought we were in a clean little uptrend, and we could kind of view this as a bit of a bull flag, and then a reclaim of the 20, but ultimately that did not end up panning out, right? A very nice clean trend, and thought maybe we can get going right in here, but that did not end up working out too well. AMD, another one that I got myself involved in early in the year. I tried to buy the early and anticipating the 50 simple moving average reclaim on the 9th of January, just taking out a prior day high, reclaiming the 20, thinking we were going to reclaim the 50. And something that I was saying at this time was, I still don't think AMD has done anything wrong. You look at how big of a move up it was. When you look at AMD, it was a massive move up, and we're just starting to go sideways here. This stock has earned the right to do nothing. I wanted to get in when it reclaimed the 50 simple moving average. Obviously, it wasn't until weeks later when the thing goes sideways a little longer and then ultimately reclaims the 50. So I had the right idea. I just had the wrong timing, and that is definitely something that I can improve upon into the future. Not a big deal, not too mad about taking that loss, although it was a little bit bigger of a loss, than maybe I was hoping for. But that is just a lesson to learn going forward. Really, really not that big a deal, but a lesson in maybe not anticipating the reclaim and just letting it happen, and eventually getting stopped out on the 11th was not the most fun. GEV, another one that I took. I really, really liked the way this thing had gapped up out of this massive, massive base. And then I tried to buy the pullback in the 620 setup using basically prior day's low as, kind of my guide. And the way I viewed this thing was, you had this massive, massive base breakout, right? And, I'm sitting there thinking to myself, okay, this thing, huge volume, huge base breakout, really nice move up, nice long base, buy that breakout. I missed that breakout. And then the very next day you get the pullback, and I'm literally putting some shares on the 620 setup, and my basically guide was prior day's low, and I ended up getting stopped out just the very next day. It is what it is. And again, at this point, I'm just digging a hole, right? I'm just digging a hole and I can't quite get myself out of that hole, and I'm trying to trade myself out of that hole. I'm trying to, come up with another idea and another idea and another idea. And nothing's really working. Robinhood, one that I end up buying on the 9th of December. And where are we looking? Where are we looking? And I tried to play this thing as, is this the 9th of December? This is, oh no, excuse me, the 11th of December. And I kind of viewed this as, and I thought that this name was just building another big base. Again, buying strength had been a little bit of a pain in the ass. You made a really big move. You're starting to go sideways. This name has earned the right to go sideways. That was my thinking. But of course, I come in on the gap down on the 50 and thinking, okay, nice, move down. And this thing starts to bounce as a 620 setup. It was my thinking, but then ultimately stops at low of day. And the way I viewed, Robinhood, again, big move up, starting to go sideways. Again, you get the crack underneath the 50 and the unfilled gap. That wasn't too great, but of course I tried to buy this off the 20 as I thought it was turning up. I didn't really want to be buying strength. Buying strength hadn't been working. It had just been leading to chop. But of course, a bad decision ultimately to get involved in Robinhood off of the 20 simple moving average did not close well. AEO, not too mad about this one. So I actually started shorting this thing when we were getting a little bit extended from the 50 and just a little early. I started shorting this thing in here. And ultimately, just a little early, I thought I did a pretty nice job just managing my risk. Kind of a small loss, not that big a deal. You get a little extended from the 50, which is what we were. Yeah, you're either going to get sideways or you're going to start to go down. Right idea, wrong timing, right? Could have shorted this as a double top short sale on Friday the 9th, did not. But ultimately, you start to look at an ANF as well, and some of these clothing stocks are just starting to get their butt kicked. So again, another paper cut loss, right idea. Looking back in hindsight, just bad timing. SILJ, this one, not too great. I actually tried shorting this thing a handful of times. I tried shorting this thing on the 18th. Within this consolidation, think we had a lower high, thought we were going to break down, and ultimately did not. And then I shorted it again on the 23rd. And so I started shorting this thing right in here. That did not work out well. Covers on the 20, or covers the very next day. And then I tried again on the 23rd, using effectively the 20 seconds high as my guide. And then you get the bit of a gap down, and I'm adding into that position, looking right down here. So I'm shorting it on the 23rd, adding to my position, and then ultimately, kind of getting hit in this little gap up and taking out that range and needing to cover. So it wasn't my only shot at SILJ. The reason I was playing it is if you compared where silver was compared to the junior miners, taking out that October high, right at one point, silver was up like 30-40% above October's high, and the junior miners were just going absolutely nowhere. So my thinking was, we're dealing with some relative weakness. I thought the silver junior miners were kind of telling us that maybe silver was going to start to come down, but that was not the case. Silver kept going up. The junior miners started to play catch up. And for that matter, my NEM also continued higher. So all things told, I basically ruined a really nice NEM trade being short silver. That is a lesson learned for the future. And something that, I could definitely work on going forward. XOM, absolutely beautiful. So I started to buy this thing, and we'll kind of look at the chart here in the moment. I started to buy this thing, and I actually owned it earlier. We'll talk about that in a second. But I owned it earlier. I got shaken out just a few days prior, and then I rebought it back. I tried adding, held it flat, thought maybe if we rejected, that 120 level, not too good. And then some recent trades here, some recent trims, and let's dive into the chart. So XOM, I actually bought when it held its 50 simple moving average, and I added like I want to say 115s, and then I ended up holding this for this move right into that 120 level, ultimately to get stopped out below the 50 simple moving average. And I would implore you to look at WTI and see how this thing was acting on December 16th. You were effectively closing and making new lows, only to end up gapping up and holding that level the very next day in WTI. And so when I noticed that you were wicking off the 50 on the 18th, I went ahead and took it over prior day high on the 19th using the 50-day as my guide. And then when you took that prior day high out, I added some more as well. And then I tried adding a few on the 29th, which I cut on the 31st. No big deal. Then we had the Venezuela news. And the trend for me before that Venezuela news was this thing was already turning up, and this base was already really, really well set, thinking, we were due for a breakout considering what other commodities were doing. And, what did XOM do? You had the big Venezuela shakeout, but ultimately I just held through that so long as the 50-day was going to hold. I was just going to give back the open gains. At that point, didn't really matter. Very next day, ended up bouncing very strongly, and then we've had a pretty nice trend since, and what looks to be a potential multi-year breakout. We'll find out if that's actually going to pan out how I hope it will. But yeah, most recently, some nice trims on XOM, and still in open position, still have 60% of my position there, and we'll just continue to let it work, hopefully for the rest of the year, and I don't have to do anything else with my open position. Stats for December. This is actually how I was looking at one point. I was down 311K, but now we are only down 40K on December, and it's looking like with my NEM and my XOM trade that those will end up cleaning up the month. Terrible, terrible win rate, right? 6 wins, 23 losses, 20% win rate. 29 trades. That's just a few too many. Plus my 2 open trades. That's 31 total. Nice job holding things, right? 12 days. And that should actually get larger if XOM goes on to work, for a really, really long time. And, as soon as I close my NEM trade, I've had that one for a month as well. So my holding time will go up. And then my holding time on my losing trades is always about the same thing. It's just like 1 to 2 days, depending month to month. But usually I let go of my losing trades on average same day when I have them. So I do not like to hold on to losers. I don't think anybody should hold on to losers. There's a famous adage out there: let your winners run, cut your losers quickly. It's my hold time that speaks very, very true to that. And obviously not the world's greatest month. Even when I do close XOM and NEM, I mean, it could be incredible based on what XOM might or might not do. But it maybe wasn't the like some all-star month as maybe November was. It was November was amazing. These are all the trades that I did take in December. Feel free to zoom in on these and kind of go through what I have. Again, 2 open trades at the moment, down 40K on the month, and it just is what it is at the moment. So take it 1 month at a time. I mean, definitely some mistakes made with shorting silver on the front side, but it's sucks. It sucks. And then these were some stats, and now we can kind of start to dive into 2025, some lessons learned, trades taken, etc. Stats for 2025, as it stands right now, basically just over a $7 million a year, which is an incredible blessing. Really, again, a difficult yet super, super fun year to trade in. I took 235 trades, and by the way, that number is still a little off, and the reason that is because, one, I still have some open trades, but also there are times when I am trading around a core position, and what will end up happening is if I opened a trade in October, and let's say I add to my XOM position, it won't add it and aggregate it as a brand new trade. It'll aggregate it into, if I haven't closed my October trade on XOM, it'll just aggregate it with the October trade. So it'll still be 235 trades, even though, I might sell some off and then rebuy some back, and it won't make it 236, and then sell some off and then add some back. It won't make it 237. It'll just leave it at 235. So I definitely did take more than 235 trades on the year. One thing that I have to work on is being a bit more selective. I know people who perform better, a whole lot better than I did, from a percent gain to their portfolio by doing a whole hell of a lot less. And that is something that I would like to do. I'd like to be a whole lot more selective. Obviously, some of you guys might say, well, Ariel, you killed it. You made tons of money. But ultimately, I want this career to be as least stressful as possible, considering how stressful this career can actually be. And again, maybe I'm not so stressed because I love what I do. I'm blessed to do it. I'm blessed to make good money. I mean, all that's really good. But when you've got a lot of things on your plate, the last thing you really want to do is just be clicking the button all effing day long. That is not for me. And not something that I want to do. My largest gain of the year, I want to say it is still Hims, and we could kind of look at that. My largest loss of the year, I do want to say is Iron, I believe. Um, but we can look at that. I did pull those trades up. Again, 36% win rate. That's kind of on par for 2023 and 2024. I basically did the exact same thing, about 35%, 36%. And I don't want to be right, guys. I do not want to be right 60, 70, 80% of the time. When you're right that often, what does that tell me? You're scalping. And there are maybe going to be times when you have to kind of shorten up your time horizon, your window in a choppy environment, which is something that 2026 is proving to be a round tripping kind of a market where I'm also red in January. And so buying an undercut and rally, financing some of that risk on day one, I think that that's really important. But I don't want to have to be right in a market with so much unpredictability. Imagine, it's a news driven market. You've got Trump tweeting left and right. You've got all of this news, geopolitical, whatever's going on in Iran or with China and the US and Russia and Greenland and all this stuff that moves the market. And you need to be right 70% of the time to make money. That sounds miserable. Make sure that you know your stats. You don't have to have some insane win rate. I think everybody kind of thinks that they have to have some insane win rate. And again, as it stands right now, with 3 open trades, it is still technically a better year than what I have on closed trades. None of my open trades are going to be anywhere near red. They're going to be super, super bright green. These are the biggest losses for the year. Actually, Rigetti ended up being my biggest loss of the year back in October. My second largest loss was Iron, and Iron at one point I was down over 200,000 on that trade. I kind of got hit, and we can look at this chart. I had a super, super nice idea on this thing on the short side. I thought we were breaking down. This reminded me a little bit of AEVA, where you get the breakdown, you get the pop back up, and you start to roll over. I thought this was AEVA all over again, where you get the breakdown, right? You get the pop back up, and then all of a sudden you really break down. And I thought Iron was going to be the exact same thing. So I had a pretty damn chunky position in here. And then, of course, you get the Microsoft news. I used a 5-minute opening range break. So I just let the first 5 minutes play out. And I knew this left side peak at 74.15 was going to be a pretty valid level as a double top short sale. And you hit that level and you just start to reject all day long. That allowed me to cover some of my position for a much, much smaller loss. I wish I would have retagged this thing as a short. And this probably could have been a $1 million plus kind of short opportunity. It is what it is. It is actually setting up here as a potential long going forward. So one that I will absolutely keep an eye on just in case. But yeah, this is a nice little table of all of my biggest losses. I had plenty of them. I literally couldn't fit them all on one page. Otherwise, you'd need a microscope to kind of look at these things. But I had plenty of losing trades. That's just the reality. That is trading. Like I said, I don't want to have to be right all the time. That is kind of annoying. Biggest wins of 2025. Again, a couple open positions: Netflix, Neem, and XOM. Those are still open right now. These are really, really nice trades. Yeah, Hims, biggest trade of the year, and we can look at where Hims took place. January, I bought Hims right in here through this low cheat setup. And just a very nice bottoming base. Buy this thing as it's starting to push on January 21st, and then sell a little bit into strength, and then ultimately trim a little bit more, I want to say, into strength, and then cut the rest. I didn't even have to nail the top to make it the biggest trade of my year, and then cut the rest on this gap down. Really, really nice trade, and you only need a couple of these. Where it goes 150%, and nail a nice little chunk of the move for it to be the best trade of your year. The second best trade of the year for me was OST on this incredible fade. I had it as a perfect. Is this April? Okay, so no, this would have been. We're way over here. We're way over here. Hold on. Here we go. I had this as a short right in here, just this Chinese stock that was being manipulated. I did post a video on this on YouTube. Timing on this thing was pretty impeccable, and I knew that this thing would fade 80%. There was like a period of time during this part of the year we had a bunch of these Chinese stocks just like being manipulated on the way up, and then once they cracked, they'd have this huge move down. I stopped playing them because of QMMM, and you just had this insane move where this thing goes from like effectively, it's just doing the exact same thing. And, I'm sitting here thinking it's going to crack. And then one day it just goes nuts from 20 bucks all the way to 300. At that point, I was like, okay, you kind of dodged a bullet. Because this is kind of, you put 10, 20,000 shares into something like this, 50,000 share, whatever it is, you're losing, it's a year ender. And it's still halted now. So just kind of one of those where it puts things into perspective, and then you end up leaving it alone. TSLA, another one of my biggest wins of the year, and this one was the trade from in September. I was pounding the table that this was, you didn't have enough money in Tesla. I did start to get long on the 5th of September. I added a little bit more, and then ultimately the breakout added a little bit more, and this was a pretty dang nice trade. And then Alibaba, first thing in the year against the 200 simple moving average, was absolutely fantastic, and I owned it from right in here. So on the reclaim of the 200 SMA, this would have been on January 22nd. So yeah, right against the 200 simple moving average. Just thinking to myself, China was a nice contrarian play, had a really nice move up, had, kind of a fade back without, big volume, reclaimed the 200, really tight spot to manage risk. And then ultimately, excuse me, I didn't have the chart pulled up. Really nice move up, nice pullback into the 200, nice spot to manage risk, and a really nice push. And then Tesla, as I said before, just kind of pounding on the table that you didn't own enough and getting long right in this little consolidation before the breakout. Really nice job for that one. But yeah, just kind of going through some of the biggest trades. And then one of the things that I would tell you in regards to Tesla is just a reminder that, and not just Tesla, when you see a really nice chart setup, you don't have to anticipate, kind of that range break. You could always be there to buy that breakout. But also, coincidentally, as we look through some of the biggest wins of the year, and it's a lesson that I'm trying to take into 2026, and let me just be honest up front, I have not done the best job of it, so I'm trying to speak to myself as I'm talking to you guys. It is, if we just add up my 25 biggest trades, right, on just this front page, and then, going all the way down to IONQ, it basically made up for my P&L for the entire year. So if I say you took maybe 250 trades for the year, my top 25 made up for all of the P&L for 2025. So, well, Ariel, what the hell happened with the other 220 trades? Well, they were small green, small red, or, break even. So, and again, most of my losses are in comparison to the wins, that they are small red. But you start to go to some of these, you're losing 18K and 20K, et cetera, et cetera, et cetera. Like in comparison to the wins, they are very small. But again, the lessons learned there is be more selective, right? What is your A plus playbook? Improve your situational awareness. When do you execute on those trades? Just so you're dealing with a lot less churn or just less headache. Right? Like, how do I review my top 20, 25, 30, 40, 50 trades and say to myself, like, how do I just get these? And then how do I eliminate the rest of the bullshit that you trade throughout the rest of the year to make your job and life a whole lot easier? Still, like I said, as it stands, 238 trades. If we look here, 238 trades. You kind of see it at the bottom. So pretty dang nice. Not going to complain about that. Again, P&L is still going up from 2025 based on the trades that I have open. It was an incredible year. Again, tricky, difficult, fun, all at the same time, packed, jam packed with opportunity. Hopefully, 2026 will be some of the same, but I would be, remiss if I didn't tell you that I'm hoping for a pullback. Pullbacks are where the best opportunities are born. Market is on a tear. That's not to say we're not going to go higher, but boy, I would love a 15% pullback again. Don't know if that's coming. I don't want to predict anything. I'd rather anticipate, or I don't want to anticipate anything or predict anything. I'd rather react to what is happening. That is the job of a swing trader, right? Let investors predict, let investors hope and pray. We are traders, we trade. And again, you do not need to be right all the time in order to make a fortune in the market. Think of things in terms of percentage instead of dollar amounts. And hopefully you guys are all trading well in 2026. I know there has been some nice opportunity. For me, it's been a little bit choppy. I have given back tons of gains on round trips, and meanwhile, I'm still paper cutting myself to death. So the green trades that I do get myself into, I just try to be patient with them, and patience is not a virtue at the moment, right? Being a little bit quicker to take some off the table, finance your risk, and then letting a piece of that trade go to work after day two. So, yeah, if you guys have any questions, happy to answer them. Sorry I didn't get this out a little bit sooner. Like I said, guys, I planning for a wedding that we have coming up in a couple of weeks, and then I've been doing tons of traveling every single weekend. It feels like, and dealing with, not really dealing with, but being in the in the Discord and having a bunch of people to kind of respond to. They take kind of a bit more of my priority instead of making this video. So I do apologize that I didn't get this out a little bit sooner. But again, life's been a little bit hectic, a little bit busy, and hopefully you guys, can pick up on some of my lessons and don't make the mistakes that I'm making. I don't just like to share, just because it was a great year. I want to share when things aren't going great. I want you guys to learn from my mistakes. I think that learning from somebody's mistakes is even better than learning from the things they do well. You could pick up on things that I'm doing well. That's great. But you don't have to make the mistakes that I'm making. You just have to learn from what I'm telling you are my mistakes, so you can kind of eliminate them from your own trading. So again, nice long video. Hopefully, again, you guys all are off to an awesome start in 2026. Cheers to 2025. Looking forward to making more of these over the months and years to come. Cheers, guys.